Well, we're here today to talk about a wonderful new gift that Congress has made available, the IRA Qualified Charitable Distribution. I'm passionate about educating generous people about the very best way to make their gifts, their tithes, their offerings, their gifts to their favorite charities. Without a doubt, this gifting mechanism is the most efficient way for them to give and minimize their taxes at the same time they're meeting their charitable expectations.
Hi, I'm Andrew Steckbeck. I'm a CPA and have been a partner for 20 years at Simon Lever LLP. I serve as treasurer at the church I attend, and I serve as a board member at a large retirement community.
Andrew, I understand Congress has some really good news for charitable people.
Congress did do us a favor this year, Greg. The good news is they permanently authorized the qualified charitable distribution from a retirement account. Now is the best time for generous people to take advantage of this gifting technique.
Can you give us the basics?
Absolutely, Greg. Persons aged 70 and a half can gift up to $100,000 from the retirement account directly to their church, synagogue, or favorite charity. These gifts count toward their required minimum distribution, which is the annual amount persons aged 70 and a half must withdraw from their retirement accounts.
That's really interesting, Andrew, but can you explain why the qualified charitable distribution is so critical?
It's absolutely crucial for two reasons. First, people who take the standard deduction on their personal tax return get no tax benefit from their charitable gifting. Utilizing the qualified charitable distribution, in effect, enables them to get a tax benefit for their charitable gifting, regardless of whether they itemize or take the standard deduction.
I see.
Secondly, the qualified charitable distribution may reduce the taxability of your Social Security benefits. Now, this is complicated, but the required minimum distribution may increase the taxability of your Social Security benefits on a dollar-for-dollar basis. In effect, a double taxation.
Interesting.
Yes, Greg. One industry source noted that someone in the 25% tax bracket could effectively pay up to 46% income tax because the required minimum distribution causes up to 85% of their Social Security benefits to become taxable. Persons in the 15% tax bracket may actually pay as much as 22.5% tax. Very few people understand this double taxation effect.
Wow, those numbers are really incredible. Is there anything else charitable people should understand about the QCD?
There is, Greg. If people itemize deductions on their personal tax return, they may find that utilizing the qualified charitable distribution is both easier and provides tax relief. On the left, you see itemized deductions relating to charitable deductions and medical expenses. Watch what happens on the right when the qualified charitable distribution comes into play. Please notice that the amount of taxable income is significantly decreased by using the QCD and taking the standard deduction. Qualified charitable distribution may be a way for people to reduce their marginal tax rate to 15% so they can take full advantage of the tax-free rates on dividends and capital gains. Higher income families may also avoid the Medicare surcharge, limitations on deductions, higher tax and capital gains rates, and the net investment income tax.
Andrew, are there any limitations on these qualified charitable distributions, otherwise known as QCDs?
There are several, Greg. First, you cannot gift a charitable gift annuity. Second, you cannot give to a foundation. Third, you cannot give to a donor-advised fund. Fourth, you cannot give to a supporting organization.
Andrew, many donors appreciate their relationship with their church or favorite charity. Can they be involved directly in making this gift?
The donor can personally deliver the check, but the check must come from the IRA and be made payable directly to the charitable organization.
Bob and I were very appreciative of Greg informing us about the benefits of gifting from our IRAs, and we did, and it saved us about $3,000 in taxes.
Andrew, what would happen if somebody has a 401k, a 403b, or a KEO instead of an IRA account?
It's usually a fairly simple three-step process. First, they should call the retirement plan administrator and have them set up a new IRA. Secondly, transfer the amount of their gift to that new IRA. Thirdly, they should make the QCD from the new IRA that has just been set up to the charity of their choice.
So, Andrew, taxes are extremely complicated to explain, but yet our recommendation is pretty straightforward.
It is fairly simple, Greg. People who are age 70 and a half or older who have retirement savings should gift to their church, synagogue, or favorite charity utilizing the qualified charitable distribution to reduce their tax liabilities.
And you feel good about it because you've given to your charities and you're saving yourself some taxes.
I use every advantage I can, and I would advocate that everybody do that. There's no reason to pay more taxes than you have to.
Andrew, thank you so much for your time and this valuable information. This has been really great. A simple letter to your IRA administrator will affect this type of a gift. Please share this video with your tax advisor to see how it will work for you. Remember, this works for both the standard deduction and itemized deductions, and it can be a powerful planning tool.